DLocal just reported their latest earnings report. Now, it really depends when you're watching this video, because when I started to film, it was down 20%. Then in the middle of the video, it was down 15%, and at the end, it was down 10%, so I had to redo the introduction. Currently, at the time of making this video, stock is down 10%. Why is that? That's what we're going to discuss in this video. EPS missed a tiny bit. Outlook meant that they're going to take a short-term hit, a bit like Adyen. Remember Adyen last summer? Adjusted EBITDA was down, margin was down. They were investing a lot in the business. And so the market punished that stock, was down, I think, 40-50% or so. A couple of months later, it doubled. A bit of the same with DLocal. I don't know if it's going to double as soon as Adyen, but right now, that's what I'm reading here in the report. Plus also new CFO, CEO, co-CEO is stepping down. So Pedro Arndt, previously CFO of Mercado Libre, current co-CEO, is now going to be the sole CEO of DLocal. And they also appointed a new member on their board. More on that in just a second. Currently, this is the state of the company. It's going to have now a market cap closer to $4.5 billion. But what I do want to point out is the growth rate that the analysts are expecting for the coming fiscal year. This is a company that is growing exceptionally fast, top and bottom line. And yes, you can clearly see here EPS. EPS is not a loss. EPS is already positive. And still, you're seeing here top and bottom line growth of 50%, 37% year over year. It's truly remarkable. Now, of course, as always, the market does not like uncertainties. And when the co-CEO steps down, when you have a new CFO, etc., etc., and of course, guidance is a bit, let's say, weaker than expected because you're investing in your business. So you are deliberately having short-term pains, margin contractions for long-term gains, margin expansions. The market will hit the stock. And again, it's not such an expensive stock. Forward PE before the reported earnings was 25.6 times. Now, down 10-15% or so, it's going to be a bit cheaper than that. But again, you're buying here a company that is growing extremely fast. Now, before jumping into the reports, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first announcement here is the appointment of Mark Ortiz. He's been appointed as Chief Financial Officer, CFO. Ortiz will report directly to DLocal CEO Pedro Arndt, overseeing DLocal's accounting, financial planning and analysis, financial reporting, internal audit, SEC reporting, tax, credit, risk, and treasury functions. Mark's appointment complements the already exceptional leadership team at DLocal. He brings over 30 years of extensive international financial and operational management experience, primarily within the General Electric umbrella companies. Quick comment here from DLocal CEO. Mark's international background includes not only key financial expertise fit to our current requirements, but also working assignments across over 20 markets, making him well suited for the global complexity that DLocal presents. I trust Mark is the optimal CFO choice to propel us to the next level of growth and reinforce our standing as a frontrunner in payment solutions for emerging markets. Then with regards to the change in CEO structure, because previously it was Pedro and Sebastian as co-CEOs. So here Pedro says, it is truly an honor and privilege to share that I am taking on the role of CEO, while Sebastian is stepping down from his executive position, but remains an active member of the board. And also they are announcing Veronica Raffo as a new independent board member, effective immediately. So clearly a lot of change in the company. Of course, you know, I think a year or so ago, there was a short seller report on the company with regards to, I wouldn't call it shady accounting, but stuff like that. Since then, well, in my opinion, the company has completely flipped the script. New CEO that comes from Mercado Libre, where he was CFO there, now a new CFO, a new board member. I mean, in my opinion, it's either them prepping themselves up for an acquisition to be acquired, or they truly want to turn this business around and continue to grow quite fast. Now, looking at the numbers for this quarter and for 2023, TPV increased 55% year over year for this quarter, and the year 2023 to 2022, 67%. Revenue increased 59% this quarter year over year. Gross profit 27%, and here comes the couple of issues for this quarter already starting here. Gross profit margin is down 9 percentage points year over year. Adjusted EBITDA was up 22%, but adjusted EBITDA margin down 8 percentage points. Profit was up 47% year over year, but profit margin is down 1 percentage points year over year for this quarter. Year over year, you can see the same things here. Gross profit margin, adjusted EBITDA margin, and profit margin are down 3 to 6 percentage points. Then with regards to pay-ins and payouts, so during the fourth quarter, pay-ins TPV increased 59% year over year and 8% quarter over quarter, accounting for 72% of TPV. Payouts TPV increased 47% year over year and 19% quarter over quarter, accounting for the remaining 28% of TPV. As for cross-border and local to local, cross-border TPV increased by 28% year over year and slightly contracted by 1% quarter over quarter. Local to local TPV increased by 86% year over year and 22% quarter over quarter. Now, with regards to the different geographies, so LATAM revenue increased 42% compared to the fourth quarter of 2022, but contracted 3% quarter over quarter. Brazil and Mexico, they're still experiencing strong revenue growth there. In Brazil, revenue doubled year over year and increased 12% quarter over quarter, whereas in Mexico, they increased 59% year over year and 18% quarter over quarter, but the sequential contraction was mainly driven by Argentina. I still believe that Argentina is going to be a huge tailwind for them now with a new president there, new way of, conducting their economic business. As for Africa and Asia, revenue grew by 121% year over year and 103% quarter over quarter. Part of the growth was driven by Nigeria, which revenues doubled year over year and increased by 3x quarter over quarter, driven by the widening spread between the official and the parallel exchange rates, which conversely also resulted in higher expatriation costs. Excluding Nigeria, revenues increased by 144% year over year and by 44% quarter over quarter in Africa and Asia, showing the continued growth across Africa and Asia. During the quarter, DLocal continued delivering strong revenue growth, both from existing and from new customers. Revenue from existing merchants increased to $176.3 million in the fourth quarter. Net revenue retention rate in the fourth quarter reached 149%. Huge number. Revenue from new merchants was $11.8 million in that quarter. Then with regards to full year outlook, they expect to grow TPV to between $25 to $27 billion and gross profit between $320 and $360 million in 2024. They say here our expectations for TPV and gross profit assume increased mix coming from tier 0 merchants as we continue to ramp up those global relationships, driving incremental TPV and wallet share from the world's leading tech companies, but at lower take rates. In terms of profitability, we expect adjusted EBITDA between $220 to $260 million and adjusted EBITDA over gross profit margin around 70%. They are reaffirming their midterm outlook of 25 to 35% gross profit CAGR growth and 2 over 75% adjusted EBITDA over gross profit margin. Our 2024 outlook, though, implies a temporary deviation from midterm guidance as we prepare the business for sustainable long-term growth. In 2024, we will invest primarily in tech, mostly to grow our tech team, followed by investments in operations and sales. As we look beyond 2024, once we conclude our short-term investment cycle in tools, processes, and people, we believe we will start to see the operational leverage inherent to our business to kick in, which again reminds me of Adyen. They said, look, they're in a position that they can invest in the business where others are cutting costs. They are investing in their business so that when they come out of that down cycle, they can reaccelerate their business across the board. I do think that we're going to see the same thing here with DLocal. It's been on the watch list for quite a while, so maybe this is a perfect opportunity. Now, with regards to the stock right now, as you can clearly see, I've highlighted the number of moves, the crazy moves that this stock has after reporting earnings. All the way back here, November 2022, stock down 44%. April 2023, stock is down 17%. Then in August 2023, up 55%, and currently it's down 10%. But like I said, it was down close to 20% at the time of starting the video. And yes, you can clearly see that this area right here around $16 or so has been quite a good support for the last couple of weeks, actually since late 2023. So there you have it. That's my thoughts on DLocal. I do think that there is a lot of potential with this company now, with Pedro Arnt as sole CEO, with a new CFO. They are investing in the business. So of course there could be some uncertainties in the next coming quarters, but I do think that at the size of this company, and especially the total addressable market that they're in, I do think there could be quite some upside if they are 100% or even 90% successful. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.